And here is our down close candle with a fair value gap in here. So this down close candle, let's zoom in a little bit. This down close candle is a bullish order block. We traded down to it last week, and then today we opened, we traded down to it once more, and then they capitalized that discount level here, which is the opening price of that down close candle, and then sent it back above the rejection block here, okay, which is the highest up close candle. Now we have this wick to contend with. Now, I was going to draw out where the consequent encroachment level is, but it's essentially look at the same level as this high here because it's close proximity to that. So it's going to afford me the luxury of saying I'm watching price to see if it can get to this level in here, okay, which is the bottom of that old civvy. And if it does that, then I want to see, does it have the ability to get to consequent encroachment of this civvy? Does it get above this and trade outside of the civvy here? And then we'll be looking for this one here. So I'm trying to avoid picking a top. As I've been mentioning, an ongoing analysis with NQ, we're trying to avoid all that. So because of this down close candle here being a daily bullish order block, this level here, this blue line, it'll appear in the lower time frame charts until I tell you it won't be. All right, here's the hourly chart here. And real quick, you can see we traded down, and I mentioned this last week. We have a buy side and balance, sell side efficiency. Consequent encroachment of that, we hit that beautifully there. You can, and we are reaching up into this civvy here, which is just before we get to the low of that daily sell side and balance, buy side and efficiency. So we traded up into this one here, and we're going to look inside of all this price action and try to decipher what took place, and also kind of like tip my hand, tell you why I said and shared what I did on X this morning. All right, so here's the 15-minute time frame. This is a bellwether chart. That means it's one of those go-to charts where it gives me most of everything I would ever need and not even require looking at a daily chart or a 4-hour chart or an hourly chart. Okay, so all the liquidity pools, all of the pertinent imbalances, inefficiencies, and such, you can see them on the 15-minute time frame, and it's very, very easy to frame out with experience, not just because I do this video. You're not going to be able to walk out there tomorrow and be able to do what I'm doing and what I've done. But it will help you understand the importance of this specific time frame, the 15-minute time frame. So this blue line here is that daily bullish fair value gap. You can see we dove down into that here last week, and we came back off of it, dropped back down once more here today in London, and then we consolidated around in here, traded back above, came back in, had a little bit of a stop rate here, rallied up and took out the buy side here and this buy side there, and drawing into that daily civvy once again. Okay, so we have a new week opening gap. I'll mention that in a moment. But on the 15-minute time frame, I was teaching this week how you can very easily look at two close proximity 15-minute fair value gaps. And those 6 levels being the high, the consequent encroachment or midpoint of it, and the low of 2 specific 15-minute fair value gaps. Now, which one is that? Well, where's the most recent one that's formed? And what's the one that formed prior to that? Just looking back, that's all you're doing. And then you use that as a canvas to study price action. When you're brand new, you don't know what you're looking for. So it gives you a context to go in and start studying. Now, what happens when the price runs away and leaves both of them? Then you start looking for the next 15-minute fair value gap. And you keep doing this continuously. So you're always having a dynamic range or canvas to study price action. This is basically anchored right to the daily bullish fair value gap. See that? So that blue line here, it intersects with that fair value gap right there. And then since I was looking at price action pre-session, towards the end of London open, we were inside of that. So now look back in time on the 15-minute time frame. This is the one that I chose was important. Why? Because it was inside the high of that drop down that was a raid, taking out sell side, which makes this what? A bullish breaker. Oh, epiphany. See how that works? Just know that this high is the first green level, and this here is the next buy side liquidity pool. So make reference to those numbers here, those price levels. That way it's understood what it's reaching for. All right, let's zoom in here. All right, same thing, 15-minute time frame. And we're looking at it with the drop down below this heavy, thick line, I thickened it up. That's the daily bullish fair value gap. And we drove down into that there. And then we started consolidating inside that 15-minute buy side amount, sell side efficiency. And I added the gradient levels of 75 and 25%. But we reach up into the buy side here and we do it here as well. But look at the reaction off of that one right there. That fair value gap is high. And look how much time it spends inside hitting the key levels. Here we start to move away from it there. And now I'm going to drop down into a 15-minute time frame that shows a little bit more detail. So we're zooming in again. So this raid on sell side, we drop back down in, and right there, we hammer the low of the 15-minute fair value gap. We rally up, trading into the other 15-minute fair value gap, which is, again, anchored to a PD array in and of itself. So see what we're doing? We're blending a confluence of PD arrays. We're not just looking at any one individual candlestick or PD array or focus point. We're blending a few of them. So if we see a low, high, lower low, as we have here, bullish breaker, this is going to be salient. This is going to be worthwhile if we start studying this. And inside that, going to the left, we see there's a fair value gap right there in the form of a SIBI. So this is going to act as an inversion fair value gap at a later time. So as we go closer to the 9:30 opening and the opening range, we can anticipate a likelihood of the market wanting to rally back above it and then use that as a catalyst to send it higher. All right, dropping down into a 1-minute chart, getting right into the nitty gritty of this. We do have a new week opening gap here, and I'll hurry up and flesh that out for you. And I want to just show you that this fair value gap that's in blue was from Friday. It was 12 minutes after 10 in the morning session. And this is Friday's week before. And I'll show you exactly where they are in a second. But this was last Friday's first potential fair value gap in the opening range between 9:30 a.m. Eastern time to 10 o'clock Eastern time. So just know that that's what these are here. And I'm not going to leave the new week opening gap levels on because it's not important. I just want to draw a parallel between this fair value gap from 10:12 a.m. 1-minute chart from last Friday is basically the same thing. So I'm not going to overburden you with all these levels. Just know that this one here, I like to keep it on there because it's basically inside of the upper quadrant of the new week opening gap. So I don't need it to be perfect. Just know that later in the afternoon, this new week opening gap high, which is last Friday's settlement close, that's going to be where buy side is. And eventually you'll see how we draw up into that. But now let's go over to this candlestick right here from last Friday on a 1-minute chart. You can see the time at 9:35 a.m. That's first presented fair value gap in the morning session on last Friday's trading NQ. And then we have this candlestick right there, which is just simply 12 minutes after 10. I liked it, and I told you last week I liked it. And because very specific PD arrays, we carry them forward in time, and that's why it appears in the analysis here. So right away, 1-minute chart, you can see how we were below that. So before 6 o'clock in the morning, stops were rated. We traded back up inside of it. This heavier blue line, it's eventually going to go away, and you'll see that consequent encroachment level that's thinner just above it. That will remain in the chart. But just know that we traded down into the low of the fair value gap there. We consolidated, accumulated around the consequent encroachment of that fair value gap that's noted here. Then we traded above it, hit the high, and then gravitated towards that higher 15-minute fair value gap. Worked its high here, taking out this high rather, and then we worked down below it, meandering around. But we want to study how price sweeps above it and below it. And once there's a sweeping effect, then it goes right back into using it again. Sweep below it, upset any liquidity below here, get back into it, use it as low, and then where are we looking for it to trade to? Higher, because we're trying to avoid what? Picking a top in the NQ. And it rallies up. Where is it rallying? Taking out highs here, okay? So again, we drop back down into it there. It rallies back up, comes back down in, pyramid, rally up, take out that first buy side. Remember the green lines I told you to remember what they were before we went further in the video? And then when we opened up here in the opening range, they sink it all the way down to take out the sell side right below these lows inside that fair value gap. down to the high of the first fair value gap I showed you to pay attention to today. Not first presented fair value gap, the first one I outlined in discussion in that video. So we're going to look at the first presented fair value gap today for June 2nd, 2025 for NQ. And that's the very first presented fair value gap here, okay? And you can see how we were using relative equal lows here, setting the stage for a initial rally up, then drops down, they clear that liquidity, goes right to the high of that 15-minute fair value gap. Then rips higher, comes back down, consequent encroachment, upper quadrant, and high in that area there, leaving the lower half intact, not doing anything with it. That's exactly what we want to see if it's going to be bullish. It rallies back up into last Friday's first presented fair value gap in gray, and then back up into the first presented fair value gap for today, Monday. So we accumulate anything going long in here, trading up higher into that 12 minutes after 10 fair value gap from last Friday, which I shared. It was one that I liked. And you're going to ask me what that was, okay? And I'm going to just tell you honestly, it's another PD array that fair value gap is, and I don't want to teach it publicly. It will be in book, but it won't be public because you can see all the accumulation of 10/12s fair value gap from Friday. They're accumulating it there and setting it up into the buy side above the high it was formed here. And then they started taking out relative equal lows where sell side would be. So they drop it down to accumulate more sell side liquidity to go long. Rallies up, and then once more we have sell side here. They take it down below that, accumulate that sell side liquidity to be counterparty to smart money being long, and they send it up higher. Moving into the future, same thing here. There's those lows we were just talking about, and then there's the fair value gap there. They hit it once more, rally up, another fair value gap there in the PM session, and they accumulate it into the final 15 minutes or so, 10 minutes of trading, market on close, and they pump it once more.